All right, let's dive into crypto today. You've sent us a really interesting mix of articles about some potential crypto stars for 2025. Onyxcoin, XCN, Ripple, XRP, and a newcomer that's generating a ton of buzz, Rexus Finance, RXS.
Yeah, it's an eclectic mix. We've got the established player, the up-and-comer, and the intriguing newcomer trying to redefine the game.
Yeah, and some of these predictions are eye-popping. One article even throws out a potential 8,800% gain. Talk about a moonshot. But let's separate the hype from the reality here. What jumps out at you from all this information?
Well, one thing that immediately grabs my attention is this concept of real-world asset tokenization that Rexus Finance is championing. It's a fascinating idea with the potential to revolutionize how we think about ownership and investment.
Yeah, it's definitely a head-turner. For our listeners who might be new to this, could you break down exactly what real-world asset tokenization is and why it has people so excited?
Absolutely. Imagine being able to take any asset with value, real estate, artwork, intellectual property, even carbon credits, and transform it into a digital token on a blockchain. That's the essence of tokenization.
So instead of owning a physical piece of real estate, you'd own a digital token that represents a share of that property.
Exactly. And this token can then be easily traded or transferred just like any other cryptocurrency. This opens up a world of possibilities, making it easier for people to invest in assets that were previously illiquid or required large sums of capital.
It sounds like a game changer, but are there any potential downsides or challenges to this approach?
Of course. One of the biggest hurdles is ensuring the security and reliability of the tokenization process. You need to have robust systems in place to guarantee that these digital tokens are genuinely linked to the underlying real-world assets and can't be counterfeited or manipulated.
That makes sense. And I imagine there are regulatory challenges as well, especially since this is such a new and rapidly evolving space.
Absolutely. Governments around the world are still grappling with how to regulate tokenized assets, and this uncertainty could create hurdles for Rexus as they try to scale their platform and attract institutional investors.
So a lot of potential, but also a lot of questions that need to be answered. It seems like Rexus is walking a tightrope between innovation and regulatory compliance.
Precisely. Now, let's shift gears and talk about Ripple, a company that's already making waves in the financial world.
Yeah, they've positioned themselves as a major player in the cross-border payment space, going head-to-head with established systems like SWIFT.
And they're gaining some serious traction. What stands out to me is the growing number of financial institutions that are adopting Ripple's technology. This suggests that they're offering something valuable that traditional systems can't match.
Right. But some analysts argue that by focusing so heavily on institutional adoption, Ripple risks becoming too centralized and straying from the decentralized ethos that underpins much of the crypto world. What are your thoughts on that?
It's a valid concern. The beauty of blockchain technology lies in its decentralized nature, and if Ripple becomes too reliant on a small number of powerful institutions, it could undermine that principle. However, it's also worth noting that Ripple is actively engaging with regulators and working to ensure transparency and compliance. This could actually help to foster greater trust and adoption in the long run.
It's a delicate balancing act, that's for sure. They need to find a way to leverage the benefits of institutional adoption while also staying true to the decentralized spirit of crypto.
Exactly. Now let's turn our attention to Onyxcoin, the crypto with a bit of a reputation for volatility.
Oh yeah, remember that eye-popping 8,800% potential gain we mentioned earlier? Well, that was for Onyxcoin. But before anyone rushes out to buy a Lambo, it's worth remembering that they also experienced a 40% drop recently.
The crypto world is a roller coaster, and Onyxcoin is definitely a ride for those with a strong stomach, but beneath the volatility, there's a compelling story here.
They're all about speed and affordability, aiming to make crypto transactions as seamless and cost-effective as possible.
And that's a powerful proposition, especially as more people around the world embrace crypto as a viable alternative to traditional financial systems.
But Onyxcoin also has its share of challenges. They've had some regulatory bumps in the road, and their recent technical analysis paints a mixed picture. We'll dive into the details of that analysis later, but for now, let's just say that there are both positive and negative signals to consider.
Right. And it's important to remember that past performance is never a guarantee of future results. Onyxcoin could skyrocket to new heights or crash back down to earth. It all depends on a complex interplay of factors, from technological advancements to market sentiment.
So it's a high risk, high reward play, just like the other two cryptos we've discussed. But that's part of what makes this space so exciting, right? There's always something new happening, always a potential for disruption and innovation.
Absolutely. And that's why it's so crucial to stay informed and approach crypto investments with both enthusiasm and caution. Don't get swept up in the hype or make impulsive decisions based on fleeting trends. Do your research, understand the risk, and invest only what you can afford to lose.
Words of wisdom.
Yeah.
So we've got the potential disruptor aiming to tokenize the world, the institutional favorite navigating the regulatory landscape, and the volatile but intriguing contender striving for mass adoption. It's a fascinating mix, and I'm eager to dive deeper into each of these cryptos. But before we do, let's take a quick break, and when we come back, we'll unpack some of the key trends shaping the crypto landscape in 2025 and how they might impact these three players.
Welcome back. I'm ready to delve deeper into these cryptos and see what makes them tick.
All right, let's start with Rex's finance and this whole concept of real-world asset tokenization. It sounds pretty futuristic, but how would it actually work in practice? Can you give us some concrete example?
Sure. Let's say you own a valuable piece of art, but you don't want to sell the entire thing. With tokenization, you could divide ownership of that artwork into, say, 100 digital tokens. You could then sell some of those tokens to investors, giving them fractional ownership of the artwork.
So it's kind of like buying shares of a company, but instead of owning a piece of the company, you own a piece of the artwork.
That's a great analogy.
Yeah.
And just like with stocks, the value of those tokens could go up or down, depending on factors like the artist's popularity or the overall art market.
That makes sense. What other kinds of assets could be tokenized?
The possibilities are almost limitless. We could see real estate tokenized, allowing people to invest in fractions of properties without having to go through the traditional, often cumbersome process of buying and selling entire buildings. Or imagine tokenizing intellectual property like patents or copyrights, making it easier for creators to monetize their work and for investors to support innovative ideas.
It sounds like tokenization could democratize access to investments that were previously out of reach for many people.
That's one of the most exciting aspects of this technology. It has the potential to level the playing field and create more inclusive financial systems. However, there are also potential risks and challenges that we need to acknowledge.
Yeah, you mentioned security earlier. How can we be sure that these digital tokens are actually backed by real assets and can't be manipulated?
That's where blockchain technology comes into play. Blockchains are essentially digital ledgers that record transactions in a secure and transparent way. Once a token is created and linked to an asset on a blockchain, it's extremely difficult to tamper with or counterfeit.
So the blockchain acts as a kind of digital vault, safeguarding the link between the token and the underlying asset.
Exactly. But even with the security of blockchain, there's always a risk of human error or malicious intent. That's why it's crucial for companies like Rexus to implement robust security measures and work with reputable third-party auditors to verify the integrity of their systems.
It sounds like due diligence is even more critical in this space than in traditional investing.
Absolutely. Now let's move on to Ripple. They've taken a different approach, focusing on partnerships with financial institutions rather than trying to disrupt the entire system.
Yeah, and that strategy seems to be paying off. They're processing billions of dollars in transactions every month and have secured partnerships with major banks and payment providers all over the world.
What's impressive to me is how they've managed to bridge the gap between the traditional financial world and the often disruptive world of crypto. They're not trying to overthrow the existing system, but rather to improve it from within.
It's a more pragmatic approach and one that seems to be resonating with institutional players who are looking for ways to streamline their operations and reduce costs.
However, this close relationship with established institutions has also drawn criticism from some within the crypto community.
Yeah, they argue that Ripple is becoming too centralized and straying from the core principles of decentralization and individual empowerment that drew many people to crypto in the first place.
It's a valid point, and it highlights the inherent tension that exists between the desire for mainstream adoption and the preservation of crypto's original ideals. Ripple will need to navigate this tension carefully as they continue to grow and evolve.
It's a delicate balancing act.
Yeah.
But regardless of one's stance on this issue, there's no denying that Ripple is a major force in the crypto space and one that's likely to shape the future of finance in significant ways.
Agreed.
Yeah.
Now let's switch gears and talk about Onyxcoin. They've chosen a different path, focusing on speed and affordability to attract everyday users.
They're all about making crypto accessible to the masses, and their low transaction fees and fast processing times are definitely appealing to individuals and businesses looking for an alternative to traditional payment methods.
And they've been making headlines with their ambitious plans to launch a new blockchain that they claim will be even faster, more scalable, and more secure than their current platform.
Yeah, it sounds like they're swinging for the fences, but is this new blockchain just hype, or does it have the potential to really shake things up?
It's still early days, and we need to see more concrete details before making any definitive judgments. However, the concept itself is intriguing. If they can deliver on their promises, it could significantly enhance their platform's capabilities and attract new users and developers.
But let's not forget that Onyxcoin has also had its share of controversies.
Well,
They've faced regulatory scrutiny in the past, and their price has been notoriously volatile.
Right. Investors need to weigh these factors carefully and approach Onyxcoin with a healthy dose of skepticism. The potential rewards are high, but so are the risks.
Okay, so we've got the innovator, the pragmatist, and the disruptor. Each of these cryptos is pursuing a different path, but they're all connected by the underlying technology of blockchain and the shared goal of creating more efficient and accessible financial systems.
It's a fascinating time to be watching this space unfold. Now, before we wrap up, let's take a step back and consider some of the broader trends that could impact the crypto market in the coming years. One trend that's impossible to ignore is the growing role of institutional investors.
Yeah, we're seeing more and more hedge funds, asset managers, and even pension funds dipping their toes into the crypto waters. What are the implications of this trend for the cryptos we've discussed?
Well, for Ripple, it could be a major tailwind. They're already catering to institutional clients, and this influx of new money could fuel their continued growth. For Rexus, it could be a mixed bag. On the one hand, institutional investors could provide much-needed capital and legitimacy to the real-world asset tokenization space. On the other hand, it could also lead to greater centralization and potentially erode the decentralized ethos that Rexus is trying to cultivate.
And for Onyxcoin?
It's hard to say. Institutional investors tend to be more risk averse, and Onyxcoin's volatility might make them hesitant. However, if Onyxcoin can successfully launch their new blockchain and demonstrate its stability and scalability, it could attract the attention of institutional players looking for exposure to the growing world of decentralized finance.
It's a dynamic and ever-changing landscape. Another trend that's been making waves is the rise of central bank digital currencies, or CBDCs. How do you see CBDCs impacting the crypto space?
CBDCs are essentially digital versions of fiat currencies issued by central banks. They have the potential to streamline payments and increase financial inclusion, but they also raise concerns about privacy and government control. The impact on cryptos like Bitcoin and Ethereum, which were designed to be decentralized alternatives to government-issued currencies, remains to be seen. Some believe that CBDCs could pose a threat to these cryptos, while others argue that they could coexist and even complement each other.
It's too early to tell how this will all play out, but it's definitely something to keep an eye on. Another trend that's been gaining momentum is the integration of crypto into the metaverse. We're seeing virtual worlds where users can buy and sell digital assets using cryptocurrencies, and some believe that this is just the beginning of a much larger trend. What are your thoughts?
The metaverse is still in its early stages of development, but the potential for crypto integration is immense. Imagine a world where you can seamlessly move your digital assets and identity between different virtual worlds, all powered by blockchain technology. It's a compelling vision and one that could have a profound impact on the future of both crypto and the internet itself.
Yeah, it sounds like we're on the cusp of a new era of digital innovation, where the lines between the physical and virtual worlds are blurring, and where crypto is playing an increasingly central role. It's exciting, daunting, and full of possibilities, and I, for one, am eager to see what the future holds.
Me too. But let's not get ahead of ourselves. We've covered a lot of ground today, and I think it's time to bring things back down to earth and offer some practical advice to our listeners who are trying to make sense of this complex and ever-changing landscape. What are some key takeaways that investors should keep in mind as they explore the world of crypto?
Well, first and foremost, remember that knowledge is power. The The more you understand about blockchain technology, the different types of cryptos and the factors that drive market movements, the better equipped you'll be to make informed investment decisions.
Absolutely. Don't rely on hype or hearsay. Do your own research, read white papers, follow industry news, and talk to experts. The crypto world is full of passionate individuals who are eager to share their knowledge.
Another important takeaway is to approach crypto investments with a long-term perspective. The market is notoriously volatile, and short-term price swings can be nerve-wracking. But if you believe in the underlying technology and the potential of a particular project, don't let short-term fluctuations deter you from your investment goals.
Right. And remember that diversification is your friend. Don't put all your eggs in one basket. Spread your investments across multiple assets to reduce your overall risk. And finally, perhaps the most important piece of advice: never invest more than you can afford to lose. Crypto is still a relatively young and speculative asset class, and there are no guarantees. Be prepared for the possibility of losses and only invest what you're comfortable losing.
Those are all excellent points. And one final piece of advice from me: don't be afraid to ask for help. If you're feeling overwhelmed or confused, there are plenty of resources available, from online forums to educational websites to experienced financial advisors who can help you navigate the complexities of crypto investing.
Agreed. Now, before we move on to our final segment, where we'll offer some concluding thoughts and a provocative question to leave our listeners pondering, I want to circle back to something we touched on earlier: the technical analysis of these three cryptos. We mentioned that Onyxcoin's analysis showed some mixed signals, with a declining ADX and an RSI that's not yet in overbought territory. Can you break down what those terms mean for listeners who might not be familiar with technical analysis?
Of course. Technical analysis is a way of evaluating investments by analyzing statistics generated by market activity, such as past prices and volume. It's a bit like reading tea leaves, but instead of tea leaves, we're looking at charts and indicators.
Right, and two of the most commonly used indicators are the ADX, or average directional index, and the RSI, or relative strength index. The ADX measures the strength of a trend. A declining ADX, like we're seeing with Onyxcoin, suggests that the current trend, in this case a downtrend, is losing momentum. It doesn't necessarily mean a reversal is imminent, but it's something to watch closely.
Exactly. And the RSI measures the magnitude of recent price changes to evaluate overbought or oversold conditions. An RSI above 70 is generally considered overbought, while an RSI below 30 is considered oversold. Onyxcoin's RSI is currently climbing, but still below that overbought threshold, which means there's room for further upward movement, but it's not necessarily a sure thing.
It's important to note that technical analysis is just one piece of the puzzle. It should be used in conjunction with fundamental analysis, which involves evaluating a company's financial health and future prospects to get a more complete picture.
Agreed. And it's also important to remember that no indicator is perfect. They're simply tools to help us make more informed decisions, and they should always be used with a healthy dose of skepticism.
Well said. Now let's move on to our final segment, where we'll synthesize all of this information and offer some concluding thoughts on these three cryptos and the future of the crypto market as a whole.
All right, so we've explored the ins and outs of Rexus Finance, Ripple, and Onyxcoin. We've talked about their strengths, their weaknesses, the trends impacting them, and even touched on some technical analysis.
It's been quite a journey, but as we wrap up this deep dive, I think it's crucial to synthesize everything we've learned and provide some final takeaways for our listeners.
Excellent point. So let's start with Rexus Finance. They're aiming to tokenize the world, but what are the key things investors should consider before jumping in?
Well, the most important thing to remember is that Rexus is a high-risk, high-reward proposition. They're still in very early stages, and there's no guarantee that their vision will come to fruition.
That's right. Tokenizing real-world assets is a groundbreaking concept, but there are significant challenges to overcome, from regulatory hurdles to technological complexities.
But if Rexus succeeds in building a secure, reliable, and user-friendly platform for tokenizing real-world assets, the potential rewards for early investors could be enormous.
Imagine being able to invest in fractions of skyscrapers, famous paintings, or even patents for groundbreaking inventions. It's a tantalizing prospect.
Indeed. But it's crucial to approach Rexus with a balanced perspective, acknowledging both the potential and the risks. It's not a get-rich-quick scheme, but rather a long-term investment that requires patience, due diligence, and a tolerance for uncertainty.
Now, let's turn to Ripple. They've taken a different approach, focusing on partnerships with financial institutions rather than trying to disrupt the entire system.
And that strategy seems to be working well for them. They've already established themselves as a major player in the cross-border payment space, and their technology is being adopted by a growing number of banks and financial institutions worldwide.
But their close ties to the establishment have also drawn criticism from some within the crypto community who view it as a betrayal of the decentralized principles that underpin the creation of Bitcoin and other early cryptocurrencies.
It's a valid concern. The question of centralization versus decentralization is a complex one, and there's no easy answer. Ripple is walking a tightrope, trying to balance the benefits of mainstream adoption with the need to preserve the core values of the crypto movement.
And finally, we have Onyxcoin, the volatile but intriguing contender that's aiming for mass adoption with its focus on speed and affordability.
Onyxcoin is certainly an exciting project with a lot of potential, but investors should proceed with caution. Their price has been notoriously volatile, and they've had their share of regulatory challenges in the past.
Plus, they're banking on the success of their new blockchain, which, while promising, is still unproven. It's a classic case of high risk, high reward.
Exactly. Onyxcoin could soar to new heights or come crashing down. It all depends on their ability to execute their vision, navigate the regulatory landscape, and build a loyal and supportive community.
So we have three cryptos, each with its own unique strengths, weaknesses, and potential. What are some overarching lessons that investors can take away from this deep dive?
Well, I think the most important takeaway is that the crypto market is still in its early stages. It's a rapidly evolving landscape with incredible potential, but also significant risks.
It's like the Wild West of finance, with opportunities for those who are brave and savvy, but also dangers lurking around every corner.
Precisely. That's why it's crucial to approach crypto investments with a balanced perspective, doing your research, understanding the risks, and never investing more than you can afford to lose.
And don't be afraid to seek out guidance from experienced professionals who can help you navigate this complex world.
Exactly. Crypto can be intimidating at first, but there are plenty of resources available to help you learn and make informed decisions.
Now, before we sign off, let's leave our listeners with a thought-provoking question to ponder.
All right, here it is. As crypto continues to gain mainstream acceptance, do you think it will ultimately lead to a more equitable and inclusive financial system, or will it simply reinforce existing power structures?
That's a great question, and one that I don't think anyone has a definitive answer to yet. But it's a question worth thinking about as we navigate this uncharted territory.
Indeed. The future of finance is being written right now, and crypto is playing a major role in shaping that future.
Well, we've reached the end of our deep dive. We hope you found this exploration of Onyxcoin, Ripple, and Rexus Finance informative and insightful.
And we encourage you to continue learning, exploring, and engaging with this fascinating and ever-evolving world of crypto.
Thanks for joining us. Until next time.